Let's have group 5, then let's go back to the even numbers.
Number 2, sale of equity instruments not held for trading of other entities and from returns of investment from those instruments. Our answer is investing in flow because, as stated in question 16, letter D, it is an example of investing activities and it is an inflow because it is from returns of an investment.
Number 2 actually describes two kinds of transactions, the sale of the investment itself and the return on those investments. But basically, both will be classified as investing inflow. Plus, I hope you'll notice, class, by number 2 and number 25, class, there's open and close parentheses. They're not held for trading. Can you see that one, class? Because what's the significance? Because if it is held for trading, class, then that means it is now part of your operating activities, class. If it's part of your trading activities, then that means it is part of your primary or principal business activities. And if it's part of your primary operations, then that will now be classified as an operating activity. Is that clear? But what if it's silent, class? What if it does not specify whether it is not held for trading or held for trading? The assumption there that it is for investment purposes, class. If it does not state that it is not held or held for trading, assumption is it is for investment. Number 4, please.
Loans made and acquisition of other entities' debt instruments. The answer, sir, is investing outflow because it is stated in the book that it is an investing activity whenever there are cash payments to acquire equity or debt instruments of other entities and interest in joint ventures. And it is also stated that cash advancement and loans made to other parties are investing activities.
Okay, very good. That's correct. Number 6.
Payment of dividends. Our answer for number 6, sir, would be financing outflow because according to the book, payments of dividends are the cost of obtaining financial resources. Although alternatively, it can be considered an operating one outflow because according to the book as well, it assists the users in assessing or determining the ability of an entity to pay out dividends out of its operating cash flows.
Okay, so that's correct. Next item, please. Number 8.
Sale of loans, debt, or equity instruments carried in trading portfolio. Our answer, sir, would be operating inflow because it is stated here in the book that cash flows arising from the purchase and sale of dealing or trading securities are classified as operating activities since they are similar to inventory acquired specifically for resale.
Okay, so what would be the keyword for number 8, class? What makes it obvious as an operating activity? The word
Trading.
trading. That's correct. Again, if it's trading, class, part of your principal operations already. So therefore, operating activity. I hope it's clear to you na, class, the importance of the label trading and non-trading. Next, number 10.
Acquiring an asset through a finance lease, NCA non-cash activity because you acquire the asset through a finance lease rather than cash or cash equivalent.
So that's correct. And it's understandable, class, if you don't have an idea on what finance lease is, class. This is covered in another standard, class, particularly PFRS 16. It's good that you were able to answer number 10 correctly. Number 12.
Payments of taxes. Our answer, sir, is operating outflows since tax determines the entity's profit and loss, and it will not only be and only it will not be included in operating, sir, if we can determine the particular tax as financing or investing activity.
If it's not clear that it is related to a financing or investing activity, automatic classify it as an operating activity. If taxes, class, always outflow, class, you will not be the one that will be paid with taxes, class. We are always the one paying the taxes. So this would be an outflow.
Number 14, purchase of loans that are equity instruments carried in trading portfolio. Our answer is operating outflows, sir, guys. Same sa number 8. Bisag purchases of loans that are equity instruments, it is carried in the trading portfolio, which is part of the
operation of the business, normal operation.
But how is it different from number 8?
Purchase.
Okay,
Of
so
loans.
in number 8, it is an inflow. In number 14, it is an outflow.
Outflow.
Okay, thank you. Number 16.
Receipts from sale of goods or rendering of services. Our answer is operating inflow, since receipts from sales of goods is an explicit example of operating activities, and it is considered inflow since it is from receipts.
Okay, that's correct.
Number 18, repurchase of company's share. The answer, sir, is financing outflow because cash payments to owners to acquire or redeem the entity's share is a financing activity. And another reason, sir, is that the share repurchase has also an impact on the shareholders' equity. So rather than paying dividends, a business can buy its own shares, increasing future income or cash returns per share.
Okay, very good. That's correct.
Number 20, our answer in number 20 is NCA, sir, or non-cash activity, because it is the process of by which an entity acquires an equity by means of
You acquire asset without paying.
equity issue. An acquisition of an entity by means of an equity issue, and although it affects the asset or capital structure of an entity, it does not, however, affect any of the cash flows.
Okay, that's correct.
22. Principal collections from loans and sales of other entities, debt instruments. Our answer, sir, is investing inflow, sir, because it is a collection from loans receivable, which is a long-term asset.
Okay, because this is now an investment class. Okay, you are the one giving away your money and letting other people borrow class. So basically, you are now the financer class. You are the financer of another company, then that makes you the investor. So definitely, this is an investing activity. But this is an inflow because you are now getting back your investment. Okay, you're now getting back the money you have loaned to another business. Number 24.
Proceeds from issuing share capital. Our answer is financing inflow because it's a transaction between the entity and the owner, sir.
Okay, and obviously this is an inflow because it is a proceeds. You're the one receiving cash.